Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market balanced in the lower part of the previous day's range and found buyers at support. At this point, heading into the open, we're going to be using 66 to 68 as the micro bull bear zone to establish our short-term directional bias. And if the market can hold 66 to 68, then we could be looking at a move back up towards 1975 and 76.5 to 78.5. We have the open gap and naked VPOC above, which can serve as an upside objective if this 66-68 zone holds up. Looking at the other markets, NASDAQ overall is still holding up pretty well, and although TF put in a deeper pullback, it's now at support. And at this point, if TF holds above 1177 to 1178, that can still be a spot where buyers are active in that market, and that can result in some upside momentum in the S&P. So over here, just looking at the market structure, we can see that 64.5 was the absolute low, and then the market started bouncing within this range. So if we break below 66 to 68, and then especially below 64.5, then we'll look for a move down to the 57 to 60 initial support zone. First test, the expectation is still for buyers to be active at that zone. Now, because we'll be breaking from a small balance area up here, the buyers may not be active until the lower part of the zone. But the expectation is that the first test of the zone will still attract buyers for a rotational type bounce back up. And because the bigger picture is still bullish, technically this zone still has potential to shut off the selling, but it is a little bit riskier because if we liquidate outside of this balance and start heading lower, then we could go down to 52 to 54 before the selling really shuts off and the market turns around. But, like I said, we're in this overall uptrend and the bigger picture bias is still bullish. So when you're in this kind of market, the selling can shut off at either of these zones, 57 to 60 or 52 to 54. This is really a key area for the S&P right now. So the first test of this zone, if we actually head down there, would be a good spot to actually fade the downside momentum and look for a reversal back up towards at least the 59 to 60 area and potentially back up to 64.5 and then 66, 68. So even that would be a potential bounce area off of this 52 to 54 bull bear zone, but that only comes into play if we actually break below the 66 to 68 and 64.5. As long as we hold above this little range, kind of the bottom of this recent balance and recent range over here, then we still have to give more edge to the buy side. And because TF is also set to open right at support, the expectation, the default scenario is still that buyers will be active around this 66 to 68 micro bull bear zone and make a push at least up to 70.5 to 72.5. And then if there's some decent momentum behind it and the Russell starts picking up as well, then moving up to the 75, yesterday's high, and 76.5 to 78.5 is not going to be much of a stretch. So if we take out 70.5 to 72.5, then there should be enough momentum to carry us to yesterday's high and to the 76.5 to 78.5 zone and fill the gap and naked VPOC. And at that point we'll have to reassess and kind of see how much strength there is in the market once we're heading up there, because similar to yesterday, there isn't really a whole lot going on the econ calendar. We have the JOLTS number at 9 a.m. Central. We have some Fed speak later in the day, but not really any major catalyst. So even if we head up here, we will look to take profit at 76.5 to 78.5, because even if the market breaks to a new high, it'll probably just be a marginal high, given how much of a pullback we saw in TF. That's really a red flag right now in the market. The pretty deep pullback that we're seeing in the Russell, that could kind of limit the upside in NQ and ES. So not really shooting for any huge trades, to the upside or the downside. And the main idea is if you can get in with a 2 or 3 point stop where the market's giving you 4 to 6 points, those are the types of setups that we're going to focus on. And if we're not getting the right location, or if the target is not really far enough to justify the risk, then we're just going to sit on the sidelines and wait for the right setup. But given that we're at a important inflection point, which is kind of the bottom of this range, I think there should be a decent setup outside of this, right? Either we hold here and we push up, back up towards 75 at the very minimum, or we fail and then we liquidate down, which would actually, be a trade that probably has some decent momentum down to at least the 57 to 60 area, and again potentially lower. But because of this overall uptrend, we just have to be a bit more conservative on exiting the shorts, and it allows us to be a little bit more aggressive on the long side and rely on that overall uptrend to kick in on any pullbacks into support. So those are the main ideas this morning. We'll be watching again 1177 to 1178 on the Russell on TF, and 64.5 and 66 to 68 on ES on the S&P. And based on how the market reacts at these areas, that'll give us an idea on which way to position ourselves. And as long as it holds, long side bias. If it breaks, short it down to 57 to 60, take profit, and then see whether the market's telling us that this could be the end of the move, and perhaps even trade it on the long side, or let it flush out a bit more, and then 52 to 54 becomes a pretty decent long setup on first test. So those are the main ideas. Let's see how well the buyers hold up at the 64.5 and the micro bull bear zone this morning off the open, and we'll take it from there.